Good evening, Venkat. Okay, fine. So let's start. So in the last class, I have started the topic of national income and its accounting, right? And I told you to understand. We will do this thing step by step, right? Because it's more or less conceptual topic, and most of the students are confused in various concepts. So I told you I'll go step by step, and I'll make sure that each and every concept should be clear in your mind in the proper way, so that you should not face any difficulty in the understanding part. Though in general they are not going to ask too much questions from this area, but this topic is very important for understanding of the economics overall, right? So that's why we will go slow steadily, and we will build our concept. So to understand the concept of national income, it is very important to first understand what is GDP. And I told you that the concept of GDP was given by Simon Kuznets, right? And he is also regarded as father of econometrics, right? Econometrics, where economics, maths, and statics, basically maths and statistics, is used for the purpose of study of economics, and it makes subject more empirical in the nature. What is empirical? Good evening, Nikki, Jyoti, Vishwas, everybody, good evening. So economics is going to be more empirical in the nature when we use the data and stats, and for that compilation of data and stats we use the maths and statistics, and that branch is known as econometrics, and it was contributed by Simon Kuznets, right? So he has given the concept of GDP, and he defined the GDP as what? Total factor income generated by residents of a country during a financial year. This is what I have explained you in the last class, and for that purpose, first I explained you how we do define the country, the land boundaries as well as sea boundaries. Land boundaries are clearly demarcated, right? So, for example, there are some disputed areas like in Jammu and Kashmir or Arunachal Pradesh. So, Jammu and Kashmir and Arunachal Pradesh, wherever the income is generated, India is going to calculate in its GDP, and China is also going to show that it is part of our GDP, right? So we should not go in those controversies, but because it is not required. But any country is going to first calculate the entire income generated in the land boundaries plus sea boundaries. And for sea boundaries, I told you the concept of what? Concept of land boundaries plus exclusive economic zones, right? So whatever you are going to generate, they will come under this category. Then I told you the concept of resident, minimum 182 days for the purpose of generation of income. And at the same time, I also told you what we do not consider as a resident. If you are working in the embassy, then your income will be calculated in that country's GDP of which embassy it is, right? And regarding the factor income, I told you first to understand market price. What is the market price? Market price is comprised of each and every factor involved for the production, means whatever the person has spent on land, labor, capital, that is the factor cost, plus he also pay indirect taxes. After paying indirect taxes, sometimes there are some essential goods, but the price of those essential goods in terms of factor cost and indirect taxes are very high, and it cannot be afforded by the people who have no income or very less income. That is why, in order to decrease the market price, government do provide the subsidies, right? So MP is equal to factor cost plus IDT, indirect taxes, minus subs, right? So you can find the factor cost. How you can find the factor cost? That is market price minus indirect taxes plus subs, right? So in this way we can find the factor cost. So when we talk about this gross domestic product, gross domestic products, yes, Nikki. Sir, any tourist come to India, it is it add in the GDP of India? So tourist, see, when tourist will come to India, he is going to spend money, right? He is going to spend the money in the India for the purpose of purchasing of the goods. Then definitely the income which is going to be generated through the tourism is a part of our country's GDP. When you will get the visa, there are the different kind of the visa. There are the different kind of the visa, right? I'll give you a very good example. Visa and how the tourist generated income will be the part of country's GDP. So it was, I think, year 2011. I don't remember the exact year, but it was a time of UPA government time, and that means it was time between 2009 to 2014. That was a phase, and all of you know about Baba Ramdev, right? So Baba Ramdev went to the UK. He went to the UK, right? And he was asked to leave the country. He was asked by UK authority to leave the country, right? And this was a time when Baba Ramdev was protesting against many of the policies of UPA government, right? He was protesting many of the policies of UPA government, and that is why he told the media that UK government has expelled him from the UK because he is opposing the government. So government of India has conspired against him to deport him. But actually, the issue was different. Ramdev went to the UK for the purpose of what? He mentioned that ki, I want to visit the country because I want to do some cultural activities like telling people about the yoga and all other things, right? So you got the visa as a tourist visa, right? So you got the tourist visa. So when you got the tourist visa, you should go for the sightseeing and meeting the people and other things. But what actually he was doing during the many of the sessions, he is not just telling about the benefits of the yoga, he is also telling about the benefits of the product which he is making, the Ayurvedic products, right? So actually it is a kind of marketing you are doing. So on the tourist visa, you are acting as what? You are having a tourist visa, but you are functioning or working for your product promotion. So you are in the UK by saying the UK authority ki you are here for the tourist purpose, but you are actually doing the marketing activity of your products. So you are in the country for the purpose of what? Marketing and promotion of your product. So definitely that do not come under the category of tourist visa. It comes under the category of business visa. So you must took the business visa if you want to visit. So this is why the UK government told him that ki you should leave the country and you can apply for the business visa, then you can do this activity, otherwise we will not allow you to do those activities. However, the political things was completely different. So in that way, when you will get the visa of a particular country, you have to fulfill certain terms and conditions, and by those terms and conditions, you will be come under the category of resident for the temporary purpose, right? So whatever the spending you are going to do there, it is going to be the part of that country's economic activities, right? So give you more clarity. To give you more clarity, everybody like momos, right? Everybody like momos. So just giving an example. Don't take it otherwise. Just giving an example. So all I do not intend to hurt any person's feeling, but I just want to be the politically very correct. So that's why I am giving this example. Suppose that there is a person Sherpa and other person is Thapa. Both are Nepali guys. They are from Nepal and they come to India. They came to India to sell momos, right? They come to India to sell the momos, right? And after selling the momos, each and every day after selling the momos, they get back to their country, right? Because India and Sri Lanka India and Nepal have visa free entry. So both come to India and they sell their momos in India. But there is one difference. What Sherpa is doing, Sherpa will come to India, purchases raw material and prepare momos in India and sell in India. Whereas what Thapa is doing, purchasing raw materials in Nepal, prepare momos there in Nepal, and come to India to sell, right? So both are earning 500 rupees per day. Suppose both are earning 500 rupees per day, Sherpa and Thapa. But the income of Sherpa will go to India's GDP, whereas the income of Thapa will go to Nepal's GDP. Why? Because all the production activity is happening in the territory of India. The production activity is happening in the territory of India. That is why all these product, right? All these product are being land labor capital. The factor cost is involved in India. In the first case, factor cost is involved in India. That is why that will go to the India's GDP. Whereas in the second case, the case of Thapa, the factor cost is where is at Nepal, right? So that is why the income generated through the selling of momos in India by Thapa, it is going to be the part of Nepal's GDP. Fine. Now another example. Suppose that there is a car company, right? There is a car company. Take example of any car company like suppose that any means ABC company. So ABC is a car company and ABC car company is selling two kind of the cars in India. One is M type and another is N type. M is manufactured in India. M is manufactured in India, whereas N is manufactured in South Korea. It is manufactured in South Korea and it is just being sold in India. it is being sold in India, but it is manufactured in South Korea, then in that case, the income generated by ABC, the income generated by ABC with model M, it is going to be the part of India's GDP, whereas the income generated through the manufacturing of car N, it is going to be the part of South Korea's GDP. See, we are not concerned with the profits, right? So profit, yes, he is taking the profit, right? Yes, obviously he is taking the profit, but whatever the profit he is, see, we are not concerned with the profits you are making. If you are concerned with the profit making, then we have other concept. When we understand the concept of GDP, we are not focused where the final income is going. We are not concerned with the when we are concerned with the GDP, we are looking where income is generated, right? Where income is being generated. So it is important to understand the concept when we are concerned with this domestic product. So why the term domestic is being used? Where income is generated. We will see it later where final income is going. So now you have to understand, when we are understanding the GDP, we are concerned with where income is being generated. So that is why it is this is the reason why it is known as a geographical phenomena. Geographical phenomena, GDP, because GDP is showing that where income is being generated. It is not telling us who is generating the income in India. For example, in India, lot of foreign companies are there, right? Lot of foreign companies are there in car manufacturing, in bike manufacturing, in all the goods we are manufacturing in India, right? Services manufacturing. There are many companies. Suppose that one, two, three, four, five, these are companies of foreign origin. These companies are of foreign origin, whereas companies A, B, C, D, E, F, G, H, these are Indian origin company, right? So we are not bothered with where the final income is going. Obviously, the income generated by these foreign companies, after paying the tax, they are taking that final income to their country. It is true, but it is not our concern when we are looking towards GDP. We are looking towards GDP, then we have to find it out where the income is being generated, right? So this is about the GDP. Is it clear? Is it clear about the GDP? Why it is known as a territorial phenomena? Okay, now as I told you, GDP is going to tell us how much income is generated by India, right? How much income is generated by India, but it is not telling us how much income is generated by Indians. GDP is not telling us how much income generated by Indians. It is telling us how much income is generated by India, right? So if we want to find how much income is generated by Indians, GDP told us that this is the income is generated by whom? This is the income is generated by whom? India. India is generating this amount of income, and that is comprised of income generated by these foreign companies and these Indian companies. So how much income is being generated in India, we got from this concept of GDP. Now we want to know that how much income is generated by Indians. How we can find it out? There is a simple way, because this is India, right? This is India, and in India, Indians, this is India, right? and India, both are generating the income. Now, if we want to find out how much income is generated by Indians, so what we have to do? In order to find out how much income is generated by Indians, we will first decimate the income generated by foreigners in India. So, when we have to calculate the income generated by Indians, we have to decimate the income which is generated by foreigners in India. So, we will reduce 1, 2, 3, 4, 5, 6 from the calculation. Right? What is our GDP? Our GDP is A plus B plus C plus D plus E plus F plus G plus H, right? Plus 1 to 6, right? So this is our GDP. Now we want to find out the income generated by Indians, right? So what we will do, from our GDP, we will minus the income generated by foreigners. One thing, 1 to 6. Whereas what we will do, we will add the income generated by Indians outside the India. So whosoever is generating income outside the India and they are Indians, their income is going to be added. So suppose that M, N and O, this is the income generated by Indians outside the India. So what we will do, GDP minus 1 to 6. That means what we did, we have subtracted the income of foreigners, then we add income generated by Indians outside the India, that is M plus N plus O. Right? So whenever we have to find out where income is generated, right? Whenever we have to find out where income is generated, we focus on the concept of GDP, gross domestic product. But whereas when we want to know who is generating income, then we use the concept of gross national product, that is known as GNP, gross national product, right? Gross national product. And how we can find this GNP? To find out this GNP, gross national product, first we have to take our GDP. GDP is what? GDP is the total income generated in India. We have to minus the income generated by foreigners in India. The income generated by foreigners in India, and we have to add income generated by Indians outside the India. Right? For writing in short, this entire thing, this entire thing, see, income generated by foreigners in India. Suppose that is A, right? This income is A. Whereas income generated by Indians outside the India is B. Okay. Income generated by foreigners in India, that is A. Now, the income generated by foreigners, income generated by Indians outside the India is B. So, what is the possibility? Either A is greater than B, or A is equal to B, or A is less than B. Right? So, three possibilities are there. What are these three possibilities? First possibility, the foreigners who are generating income in India that is greater than the income generated by Indians outside the India. Second scenario, whatever the foreigners are generating, for whatever the income foreigners are generating, their income in India, that is A, is equal to the same income, the income which is generated by Indians outside the India. Right? Third scenario, Indians are generating more income outside the India in comparison to the foreigners are generating income in India. Right? So we called it the entire thing as a net factor income from abroad. Net factor income from abroad. Why we are calling net factor? Because why we are calling net factor income from abroad? Why? Because we are subtracting the income generated by foreigners in our country, we are subtracting it. At the same time, we are adding the income which is generated by Indians outside the India. So that is why it is a net factor income from abroad. So do you understand the what is the meaning? What is the meaning of net factor income from abroad? What is the meaning of net factor income from abroad? When we say the net factor income from abroad, we will subtract all the income generated by a Honda, KFC, Domino's, whatever the income they are generating in India, we are going to subtract it, right? Whereas we are going to add all those income which Bajaj Auto is generating in the African markets, or TCS is generating in US, whatever the income TCS is generating all over the world, that is going to be added in the net factor income. Whereas all those income is generated by the foreign companies in India, like Domino's, all these companies, their income is going to be subtracted. So this is the net factor income. I hope the concept of net factor income is clear. Okay. Okay, Vishwas. So is it clear? Net factor income from abroad? Is it clear? Arey bhai, please focus on the lecture. NABARD notification whenever will come, I don't know, my dear. I don't know whether notification will come. And I tell you very honestly, I'm never bothered when the notification will come. I'm always bothered with what you should prepare properly, so that whenever the notification will come, you should be in the right position to appear in the exam, to clear the exam. Right. So I'm very sorry. I do not have any idea. And I'm telling you very honestly, I do not take participation very enthusiastically when the notification will come for any exam. Just the tentative date is fine. The tentative date. Right. So please focus on the lecture. And I think this answer can be given by admin. But sir, Domino's is a franchisee. Its income will also be counted in the foreigners' income. Domino's is a franchisee, and its income will be also counted in the foreigners' income. Yes. See, for example, Domino's have branch all over the world. but it is basically USA's company, right? So it is USA's company. Similarly, TCS is Indian company. So when we will say that TCS contribution in India's GDP, so we will see that whether TCS have its office in India or not. Yes, India, they have office in India. Okay. What income they are generating in India? That is going to be calculated in India's GDP. But what TCS is generating in USA, it is not going to be calculated in India's GDP, right? So whatever the income is generated by TCS in India, that is going to be the part of India's GDP. But what TCS is generating apart from India, it is not going to be calculated in India's GDP. Similarly, when we will calculate the income of Domino's in India, the income of Domino's in India, that is going to be the part of India's GDP. Whereas whatever the income they are generating in Russia, that is going to be the Russia's GDP. Whatever the income they are generating in UK, that is going to be the part of UK's GDP. But when we calculate USA's GNP, when we will calculate USA's GNP, what we will do? We will calculate the Domino's income not only in US, but we will also add that income generated by Domino's outside the US. Why? Because GDP and GNP, if you will see these two, what is the difference? Difference is of N and D. There is a difference of N and D. D stand for domestic. So where it is always concerned with where income is generated, and it is considered concerned with who is generating the income. Who is generating the income? So in India, Korea is generating the income through the companies. So whosoever Korean company is in India, like Daewoo or like this one, Hyundai, right? So the Hyundai's income in India, it is going to be the part of India's GDP, but it is going to be the part of South Korea's GNP. Clear? Now, okay, fine. If it is clear, now we have to write our formula. We have to write our formula with respect to GDP and GNP. So, GNP is equal to GDP plus net factor income from abroad. Now focus. Now focus here. I wrote plus. I wrote plus, and it is what I told you here. What you have to do, you have to subtract the foreigners' income from India, and you have to add the income generated by Indians outside the India. If if A is greater than B, if A is greater than B, then in that case, net factor income from abroad, this net factor income from abroad is going to be negative. This is going to be negative. Why it is going to be negative? It is going to be negative. Why? Because the foreigners who are generating income in India, it is greater than the income generated by Indians outside the India. So suppose that foreigners are generating income. A is having the value of what? A is having the value of 500 units, whereas B is 400 units. B is 400 units. So definitely it is going to be minus 100 from the GDP. So either GNP is going to be greater than GDP, or GNP is going to be equal to GDP, or GNP is going to be less than GDP. In what case GNP is going to be greater than GDP? GNP is going to be greater than GDP if net factor income is positive. If net factor income from abroad, it's very important to write this thing. This is why if we will talk about USA and India, if we will talk about USA and India, we will find that USA's GNP is going to be greater than USA's GDP. Whereas in the case of India, India's GNP is less than India's GDP. Now focus here. You have to focus here. I am talking in terms of GDP and GNP. And what is the deciding factor in the GDP and GNP? That is what, if I'll write it, why USA's GNP is greater than USA's GDP? Why USA's GDP is less than USA's GNP, or in other words, we can say that USA's GNP is greater than USA's GDP. So this is USA, and lot of companies are working here, right? Lot of companies are working here. There are some Indian companies, some USA's companies, some foreign companies. All they are working here. But at the same time, lot of US companies are working outside the USA, and they are generating huge amount of income outside the USA. So when we have seen the case of USA, what we found that in USA there are a lot of foreign companies like Indian company TCS. They are there and they are generating good amount. They are generating good amount, no doubt. But what income is generated by USA's company outside the USA? That is very huge. That is very huge, and this is why USA's GNP is higher than USA's GDP, because their net factor income from abroad is always going to be positive. Their net factor income from abroad is always positive. Whereas in the case of India, in India, a lot of production activity is happening. Lot of production activity is happening, but out of those production activity, lot of those production activity, many of the production activities, first of all, it is done by foreign companies. Whereas outside the India, The presence of Indian companies is increasing day by day, but still that is not enough to compare what foreign companies are generating income in India. So India's net factor income from abroad is going to be the negative. So that is why India's GNP is less than India's GDP. So you got this concept or not? The difference between GDP and GNP. Have you understood this concept of GDP and GNP? Okay. Now tell me if you understood, if you understood India should focus on its GDP or India should focus on its GNP. What should be the more focal area for India? Why India should means India should focus on its increasing its GDP or India should focus on increasing its GNP? Which one is more important? It is showing the income of Indians and it is showing the income of India. So I have put a difficult choice for you. India should focus on India or India should focus on Indians. Jyoti is saying that GDP, focus on, Vinkat is saying that focus on GNP. Okay. Anyone else? GNP. Okay. Dipti is saying that GNP. Jyoti, why GDP? Why not GNP? Why GDP? Why not GNP? Because GDP is also includes GNP. Anyone else want to answer this question? See, why we have to focus on GDP. We must have to focus on GDP, and this is why most of the time you can see this data only, na. 99.99% times in the newspaper, magazine, whatever the source you can see, they are talking about GDP, GDP, and GDP. They are not talking about GNP. They are not talking about GNP. Now listen very carefully. Very carefully. India's GNP can be increased without any rise in GDP. Take this case. Example. Anil Agrawal. Ellen Mittal. These are two business tycoon and they are Indians. They are Indians, right? And some of their income is coming from India. Say for Anil Agrawal, like 40% income from India and rest of the 60% of his income from other countries, right? Whereas an Ellen Mittal, again like 35% income in India, remaining 65% abroad. So suppose if this income of Lakshmi Nivas Mittal, if this income of Lakshmi Nivas Mittal and this income of Anil Agarwal is going to increase, if this income is going to increase of Anil Agarwal and this income of Ellen Mittal is going to increase, definitely India's GNP is going to increase or not? Yes, India's GNP is going to increase, but all these income is going to be generated outside the India. So neither Indian government is going to get any tax from it, nor Indian people are going to get employed, nor Indian people are going to get employment. So if this income is going to increase, definitely our GNP is going to increase. Why? Because we have to add their income, they are Indians. So our GNP is going to increase. But that GNP is not going to help India in terms of government or in terms of increasing the employment and income and uplifting the poverty. It is not going to help. Whereas if suppose that there is a foreign company coming from the South Korea, Japan, US, Saudi Arabia, from wherever they are coming to India, they are making their products in India, they are doing their manufacturing in India. So yes, final profit, PepsiCo is taking their final profit to their own country. But apart from the profit, they are paying the taxes to the government of India. They are providing the employment opportunity to the people of India. And indirectly, it is helping to eradicate the poverty. Right? So this is why we have to focus. We have to focus to increase our GDP rather than focusing on the GNP. Got my point? Is it clear? Why we have to focus on GDP rather than GNP? So tell me, everyone who is in this session, please tell me this is clear. If it is not clear, I'll explain it again. But let me know it is clear so that I can move forward. Okay, okay, fine. Is it clear? Okay, very nice, very good, very good. So till then now we understood the concept of in last class market price. Market price is comprised of factor cost plus indirect taxes minus subsidies. Today, we understood the concept of GNP is equal to GDP plus net factor income from abroad. Right. So now we can calculate GDP on two type. One, the GDP on factor cost. One, GDP on market price. So how GDP is market price? So what we will do, quantity of production multiplied by market price. How much quantity of production we did in our country and what is the market price, what we will get? We will get GDP at market price. What we will get? GDP at market price. Okay, we will get the GDP at market price, and we know that market price is equal to factor cost plus indirect taxes minus subsidies. So if we got this calculation, if we got this, what is our GDP at market price, what we have to do? From GDP at market price, we have to subtract what? Indirect taxes, and we have to add subsidies. We will get what? GDP at factor cost. So how we can find the GDP at factor cost? First, we will calculate GDP at market price, because calculating the GDP at market price is little bit easier. How it is little bit easier? We have to go for quantity of the production we did. Then we have to multiply what is the market price. We will immediately get our GDP at market price. Then whatever the indirect taxes is collected by the government of India, we have to subtract it, and whatever the amount of subsidy has been given by the government of India, we have to add it there. We will get the GDP at factor cost. Okay, Priya, I have a question, sir. Those businessmen earning outside the India, but late वो money Indian market में आएगा, Indian market में circulate होगा, it will help. कैसे कैसे बाहर से आएगा? अनिल अग्रवाल, why Anil Agarwal is going to bring his income in India? Why he will bring his income? Whatever the income is, see, there is a concept of remittance. Remittances means what? Suppose that Priya started working in USA. So you are earning there $5,000 salary a month. $5,000 salary is a huge. Don't think in the Indian rupee like 5,000 rupees. $5,000 is a huge salary. So you are earning $5,000 salary in a month, and out of that 3,000 you are spending there, and rest of the 2,000 you are sending back to India. So the money sent by you to India, $2,000, it is going to be the remittances. It is going to be the remittances, and that remittances is going to be earned by your family, right? Going to get by your family, and yes, that remittances is going to help your family to increase their wealth, increase their overall purchasing power, increase their savings, right? Whereas Whereas, if rather than you are working there, if you are working here and you are earning the salary of 5 lakhs, right? If you are earning the salary of 5 lakh, then entire amount going to be spent and saved here only. Entire amount, either some amount you are going to consume and some amount of you are going to save. So entire consumption and savings are going to be in India. Right. So those businessmen who are yeah, just giving an example. Okay. So whatever the income you are going to generate here, it is entirely going to help India. Whereas if you are generating the income abroad, only that $2,000 is going to be helping the India when you are going to remit it. Right. Generally, what happens after some point of time, people who are outside the India, they try to be settled there. Right. They try to be settled there only. Right. And gradually the remittances sent by them, it is going to decrease. However, still India is number one or number two. Most of the time is India is number one in the remittances. A lot of Indians are outside and they are sending huge amount of money to India in the form of remittances. That is true. But it is not means the Anil Agrawal or kind of businesses, they are not going to help in the larger manner. So yes, the money is helpful, but it is not as helpful as when the production is going to be in your country. So in that context, I was saying. Okay. Is it clear now? Okay, now let's move forward and understand another concept of gross and net. Gross and net का concept. So in the last class, I told you a sweet shop is selling the sweet at the price of 700 rupees, right? In the last class, I told you he is selling the sweet at the price of 700 rupees, and this comprise of what? The cost of land, labor, capital, indirect taxes, right? And subsidies. This is the market price. Subsidy is going to be zero because it's a sweet, so government is not going to provide any subsidy. So that 700 rupees is the market price, and suppose that he sold how many units? He sold 1000 units, 1000 kg per kg price. So per kg price is 700. So his GDP at market price is of 7 lakh. Now we have found that the indirect taxes are of 100. So what we did, 7 lakh minus 1 lakh, that is GDP at factor cost 6 lakh. I explained this thing yesterday. Which was when I wrote here na, land, labor and capital. So land, labor, capital is inclusive of raw material, plus it is also inclusive of profits. So all this thing is included, right? So this mithai wale bhai sahab, this mithai wala person is claiming that at market price I am generating 7 lakh. Now listen my word very carefully. You must have to listen my each and every word very carefully. This mithai wale bhaiya, thaggu ke laddu wale bhaiya is, in Kanpur we called the Bhaiji. Rather than Bhai Sahab or Bhai, in Kanpuriya language it is known as Bhaiji. So our Thaggu Ke Laddu Bhaiji is saying that he is able to generate 7 lakh rupees income at market price through production. Through production at market price. Through production at market price, I am generating 7 lakh income. And I am generating 6 lakh rupees income. I am generating 6 lakh rupees income through production. I am generating 7 lakh rupees income through production at market price. So are you able to understand the difference between these two? Are you able to understand the difference? Through production, in both cases, he is generating income through production. He is producing something and he is generating market price. He is generating the income through production, that is factor cost. Is it clear? Now we said that ki, okay, we just want to know this thing in more details. Just give me a second. I have to take this call. This is an important call I have to attend. Just give me Sorry for this unscheduled, because that was an important call I cannot miss. So I was telling you कि this guy means अपने ठग्गू के लड्डू वाले भाई साहब, भैया जी, or what you can say the bhai ji in our Kanpuriya language. So he is claiming that कि I am producing 7 lakh rupees at market price through production, whereas 6 lakhs he is generating through production, means that is income through production. So this means what is the factor cost? Factor cost per kg is 600 rupees, right? The factor cost per kg is 600 rupees. Now we when broke it down, we broke down this factor cost of 600 per kg. What we found that he is spending per kg 600 rupees, but out of this 600 rupees, 550 550 is including the cost of raw material, profit, labor cost, rent, plus 50 rupees he is spending on wear and tears. Wear and tears means whenever there is a production activity, right? Whenever there is a production activity, then there will be a wear and tear. Sometimes some machinery is going to be get broken, or some maintenance is required. So he actually spending 550 rupees for the production, whereas 50 rupees he is spending on wear and tear, that is maintenance, right? So actually, if we will ask him ki how much net income you are generating through production, net income through production, then we must subtract this amount, because this amount is being used for the purpose of wear and tears. Wear and tears, and for maintenance purpose, this money is not being used for the production purpose. So here the concept of gross and net come in the picture. The concept of gross and net come in the picture. Gross income always comprise of what? The income generated through production plus the money spent on wear and tears. Whereas when we will go for net, we will subtract whatever the money we have spent on wear and tear. So in this case, we can say that he is actually generating 5.5 lakh through net production. When I use the term net, it means what we have removed from here. We have removed the money which he is spending on wear and tear or the maintenance. Or in other words, we can say that depreciation. There will be always a depreciation. There will be always a depreciation cost, because that money is going to spend on maintenance. So whenever we will write gross, gross is comprised of net plus depreciation. Is it clear? The concept of gross and net and depreciation is clear. Yes, sir. Yes. Depreciation means wear and tears. Everyone, just please reply. Is it clear? Whatever I have explained till then now, is it clear? So till then now, I have explained you about GDP. I have explained you about GNP. I have explained you about market price. I have explained you about factor cost and just explained you about gross and net. Okay. Deepti Venkat, UMRCH. Nice name. UMRCH. UMRCH. Okay. So, for a country, first what we have to do, production multiplied by market price, what we will get? GDP at market price. So, first what we will get? GDP at market price. Once we will get GDP at market price, what we have to do? We have to subtract indirect taxes and we have to add subsidies. We will get GDP at factor cost. Right? Why? Because market price is equal to factor cost plus indirect taxes minus subsidy. This was our formula. So we got GDP at market price, we got GDP at factor cost. First, what we have calculated? We have calculated GDP at market price, and from GDP at market price, we calculated GDP at factor cost. Right? Now, another formula which what I told you about GNP. How we can calculate the GNP? GNP is GDP plus net factor income from abroad. Net factor income from abroad. That means if I will subtract minus net factor income from abroad, I will get GNP. GDP at market price, what we have to do, we have to add net factor income from abroad, then we will get GNP at market price. Why? Because this is the formula to get the GNP. To get the GNP, what is the formula? GDP plus net factor income from abroad. So what we got? We got GNP at market price. Right? GNP at market price. Similarly, as we also have GDP at market price, GDP at factor cost, what we have to add here? Net factor income from abroad. You will get GNP at factor cost. Right? GNP at factor cost. Now, another thing what I told you is gross is equal to net plus depreciation. So what is net? Net is equal to gross minus depreciation. So if I will subtract minus D, what I will get? NNP at market price. If I will minus depreciation here, I will get NNP at factor cost. Similarly, if I will subtract minus D, I will get GDP, sorry, NDP at factor cost. Similarly, if I will subtract depreciation from here, I will get NDP at market price. Now, actually, see what happens. What happens in general when you will see all these formulas: GDP at market price, GDP at factor cost, right? Then GNP at market price, then GNP at factor cost, then again NDP at market price, NDP at factor cost, NNP at market price, NNP at factor cost. Right. So the student who have never studied subject of economics, and when he is going to open the chapter of national income, generally the chapter of national income and accounting is generally first, second or third chapter. In every book, everywhere it is first, second or third chapter. And the day he broke up with the subject of economics, when he saw all these equations, and he said that कि भाई मेरे बस की नहीं है, मेरे से नहीं होगा, I can't take this relationship further because I'm not able to understand what is this nonsense. GDP, GNP, एक बार MP, FC, MP, FC, NNP, GDP, GNP. What the hell is this? Right? So students get confused, student gets scared, and this is the day from where they start developing their fear with the subject of economics. All this nonsense, what you have to understood is what is domestic, what is national, what is factor cost, what is market price, what is depreciation. If you are able to understand these concepts, you can play with these equations. You just have to play with these equations. No need to do anything. You can easily play with these equations if you know all these things. If you are not able to understand, you are trying to understand this thing, you are always getting confused. You must have to understand what domestic means, because in GDP and GNP, what is difference? The difference of D and N. It is the difference of D and N. So you have to focus on D and N. What is the other thing you have to focus? What is FC and MP? Another thing you have to focus, what is the depreciation? What depreciation means, what gross means, and automatically you will get the net. If you are able to understand, you can find it anything. Just giving an example. Just giving an example, suppose that somebody has given me NNP at factor cost. Somebody has given me NNP and factor cost, and he is asking me to find out GDP at market price. He has given me NNP at factor cost, and he is asking for GDP at market price. So N means net. Again, this N means national. So net. So first of all, I will add depreciation and I will get I will get what? I will get GNP at factor cost. I will immediately get the GNP at factor cost because I have added the depreciation. Now I have received this GNP, right? In the GNP, we know that GNP is what? GNP is equal to GDP plus net factor income from abroad, for example, X minus A. X means export minus import. So X minus A I have taken here. So I know that ki GNP is what? So if I have to find the GDP, GDP is going to be what? GDP is going to GNP minus X minus A. So do what? Minus X minus A. What I will get? I will get GDP at factor cost. And if I have the GDP at factor cost, the formula is what? MP is equal to what? FC plus IDT minus subsidy. So what I have to do? I have to add IDT here and I have to subtract subsidies. I will get this thing. Right? So you should focus on this domestic, what the domestic product means, what national product means, what is the factor cost, what is the market price, what is the depreciation. If you will focus on this thing, you can play with these, all these terminologies, you can play with them. If you are trying to understand these terms, then you are going to be confused forever and you are not able to understand the thing, right? So we have to be very clear on what we have to focus in order to understand it properly. I hope you got the clarity. I hope you got the clarity of these concepts GDP, GNP. So again, I am telling you, don't worry if you are not able to recall what is GDP, what is GNP. Just remember the basics. What is GDP? GDP, sir told me that GDP is total factor income generated by residents of a country during a financial year. So I don't know what is GDP, but my teacher told me that GDP at factor cost is what? Total factor income generated by residents of a country during a financial year. So I have to recall what? Who are the residents? What is the territory? What is the factor income? Resident means 182 days in a country. Territory means land boundaries plus sea boundaries, right? So land boundaries, sea boundaries, whatever the income generated by the residents, that is what? That is our GDP. Market price is what? The price on what the products are being sold in the market, and that is comprised of what? The cost involved in the production plus indirect taxes, and if there will be any subsidy. So I will find out what GDP at market price, and in the GDP at market price, what I will do? I will subtract what? I will subtract the indirect taxes, and I will add the subsidies. I will get the GDP at factor cost. When I got the GDP at factor cost, what I have to check? This is the product of India. Now we want to know the product of Indians. Subtract the foreigners' income and add the income of Indians generated in the foreign countries. I will get the national product, that is GNP. And what is the concept of gross and net? In the net, we do not add the depreciation. What is depreciation? Depreciation is a cost during the production which is for maintenance kind of the work. So it is not a money spent on the production, it is money spent on the maintenance of the production, that is we called as the depreciation. So if we want to know the net income, we just have to subtract the depreciation part and we will get the net income. So it's very small phenomena, but in order to solve this kind of the complex things, first of all, सबसे पहले आपने घबराना नहीं है, ठीक है। इमरान खान डायलॉग इज वेरी फेमस एंड आई लव हिज डायलॉग। सबसे पहले तो आपने घबराना नहीं है। इफ यू आर गोइंग टू बी स्केर्ड, यू आर नॉट एबल टू लर्न। Even if you are scared, don't show your means the fear. Don't show your fear. Try to motivate yourself. If I'll try, I will learn. If I'll try, I'll learn. And the best motivation for you is me. Why? Because if I can do it, why you cannot? I am a completely non this finance background person. I was never in the academics. I studied this thing, but I at a point of time I found that it is essential for me and I must learn this thing. So I learned that thing. So you have to convince yourself कि I must do it. Once you will be in the acceptance zone, everything is going to be smooth. Till then, you are non-acceptance zone for the particular thing, understanding the concept. You are never able to learn. So first, you have to believe yourself. कि I will do it. Okay, this is very important. I hope till then here things are clear. So if things are clear, just acknowledge this thing to me so that I can wind up this session. And tomorrow I will let you know the calculation part, how the things are being calculated, what is the personal income part, circular flow of income. Few things I have to explain tomorrow also. Wish was clear, sir. Okay. Venkat, good. Okay, everybody. So I am winding up today's session, and tomorrow I'll start means rest of the part. Thank you, Priya, Jyoti, Venkat, Vishwas, Prachi, Deepti, Jyoti. Okay then. Bye. Good night to all of you. We'll meet tomorrow.